There's one investing account with no contribution limits, no age restrictions on withdrawals, and access to virtually every investment the market has to offer. Unlike the Roth IRA and 401k, there are no rules telling you how much you can put in or when you can take it out. Your money is completely flexible and accessible whenever you need it. It is hands down the most powerful and versatile wealth building tool available, and it's called a personal brokerage account. Now, with that kind of flexibility comes responsibility, because this account has the power to build serious wealth, but it also has the power to burn your money if you don't know what you're doing. And I know that from personal experience. So before I break down exactly how to use this account the right way and start making some serious money, let me tell you a story of how I used it completely wrong. Back in my freshman year of high school, I saw a TikTok promoting a meme crypto coin called Dogecoin. I know, some of you may be familiar. It was less than a penny per coin, and I remember thinking, why not just throw $25 in? That $25 bought me over 10,000 shares of Dogecoin at the time. The next day, I woke up and thought, what am I doing? So I pulled my $25 out and threw it into some random stock, trying to make a quick profit day trading. About a year later, Dogecoin spiked from less than a penny to over $1 in value. My 10,000 shares would have been worth over $10,000 from a $25 investment that I held for one day. That was the moment I learned one of the most important lessons when it comes to investing. Time in the market beats timing the market. And today, that lesson is the foundation of everything I'm going to show you. Let's start with the basics. What is a brokerage account? A personal brokerage account is vastly different from the other investment accounts we've covered in this series, so let's go over it. Unlike the Roth IRA and 401k, which are tax-advantaged retirement accounts with strict rules and limitations, a brokerage account is an open, flexible investing account with virtually no restrictions on how much you can put in or when you can take it out. You can invest in individual stocks, ETFs, index funds, bonds, essentially anything that the market offers, you can do in a personal brokerage. And there are no contribution limits. None. As of 2026, the Roth IRA caps you at $7,500 a year, and the 401k caps you at $23,500 a year. A brokerage account lets you invest as much as you want. That kind of flexibility is incredibly powerful, but it does come with a catch. And that catch has cost a lot of people a lot of money, including me. I'll break it down in a second, but first let me show you exactly why this account is such a powerful wealth building tool. There are two major advantages that separate the brokerage account from everything else we've covered. First, there's no contribution limits. Once you max out your Roth IRA and 401k, there's nowhere else to put your investment dollars without a brokerage account. This makes it the natural next layer of your wealth building strategy. Second, there's no age restrictions on withdrawals. Both the Roth IRA and 401k lock away your money until you're 59 and a half years old, with a 10% penalty if you withdraw early. A brokerage account has none of that. Your money is accessible whenever you need it. This makes it a powerful tool for goals that fall outside of retirement. Think of buying a house, funding a business, or even trying to retire early. A brokerage account is perfect for this, and it allows you to access these funds earlier. And this is actually why I personally don't follow the textbook advice of maxing out all your tax-advantaged accounts before touching your brokerage. And let me explain. Right now, I've maxed out my Roth IRA for the year, and I'm doing an even split between my 401k and my brokerage account, because the flexibility and liquidity of the brokerage account matters to me right now. The ideal order of operations is to prioritize your tax-advantaged accounts first, but everyone's situation is different, so do what makes sense for you. If you're planning for early retirement or have bigger purchases coming up, it might make sense to allocate more to your brokerage account so you have easier access to your money. Now, let's talk about that catch I mentioned earlier. because this is where a lot of people get tripped up, and it directly impacts how much of your returns you actually get to keep. When you sell an investment in a brokerage account for a profit, the government wants their cut. This is called capital gains tax. If you sell an investment you've held for less than a year, that's a short-term capital gain, and it gets taxed as ordinary income. Depending on your tax bracket, that could be as high as 37%. If you hold your investment for longer than a year before selling, that's a long-term capital gain, and the tax rate drops significantly, generally ranging from 0 to 20%, depending on your income. This is why the buy and hold strategy matters. The longer you hold your investments, the more favorable your tax treatment becomes. And this brings me back to my Dogecoin story. Buying something and selling it the next day isn't just gambling. It's also the least tax efficient way to invest. Time in the market beats timing the market every single time. So now that you know the catch, let me show you exactly what I'm personally investing in and the simple strategy I use to build wealth consistently every single paycheck. When I first started investing, I had a Robinhood account. And honestly, I was gambling more than I was investing. Random stocks, short-term trades, chasing whatever was trending. And I just recently switched to Fidelity. The main reason for my switch was Fidelity's better customer service, more resources, and all of my accounts, my Roth IRA, my 401k, and my brokerage, are all in one place. That visibility was a major quality of life upgrade, and it made managing my investments super simple because they were all in one spot. Simplicity makes a massive difference when you're trying to manage your overall financial picture. Now, let me walk you through my actual investing strategy. I follow what's called the Bogle philosophy, named after John Bogle, the founder of Vanguard. The idea is simple. Keep your portfolio to 2 or 3 broad market funds and let compound growth do the heavy lifting over time. Here's exactly how my portfolio is currently allocated. 70% into VOO. This tracks the S&P 500, the 500 largest companies in America. This is my core holding in my portfolio. 15% into QQQ. This tracks the top 100 NASDAQ companies, which are heavier on tech and growth. And 15% into SCHD. This is a dividend-focused ETF that provides income and stability. And every 2 weeks when I get paid, I dollar cost average into these 3 funds automatically. I don't try to time the market, I don't chase hot stocks, I just invest consistently and let time do the work. Now, I want to be clear, my portfolio is actively evolving. It's not fully optimized, and it doesn't need to be. Your portfolio does not need to be perfect on day one. I found myself getting trapped and overanalyzing all of the different options that the market offers. And this is the case for a lot of people. I think analysis paralysis takes control here because there's just a plethora of options that you can choose from. But here's the simple way to think about it. You can always reallocate your funds, but you cannot make up lost time not being invested in the market. Before I get into where you should open your brokerage account, I want to cover the most common mistakes I see people making with brokerage accounts, because avoiding these at all costs will put you ahead of most investors. The brokerage account is powerful, but it comes with real risks if you're not careful. Here are the mistakes I see most often. Mistake 1, confusing investing with gambling. Buying a stock because you saw it on TikTok and hoping it goes up by Friday is not investing. That's gambling. Ask me how I know. Real investing is buying quality assets and holding them for years, not days. Mistake 2, panic selling during market dips. The market will go down. It always does. Crashes and market adjustments are just part of the bumpy ride. But here's the thing. It always comes back, and it always goes up. I know the market is volatile, and it might sound ignorant to say that, But take a look at this graph that tracks the stock market over the years. Do you see a trend? Because I sure do. The people who lose money in the stock market are often the ones who sell when things get scary and miss the recovery. Stay the course, invest frequently, and hold. Mistake 3. Chasing hot stocks and trends. By the time something is trending on social media, the opportunity has usually already passed. Stick to your strategy and don't let the hype pull you off course. Mistake 4. Not understanding the tax implications of selling. Every time you sell a profitable investment in a brokerage account, you create a taxable event. Short-term gains are taxed heavily. Think before you sell. If you really need the money, sure, go for it. But if it can wait, I highly advise you leave the money alone and let compound interest do its thing. Mistake 5. Overtrading. Every trade is a potential tax event and a potential mistake. The less you trade, the more you keep. The brokerage account rewards patience, not activity. Now that you know what to avoid, let's talk about where to actually open your account, because the platform you choose matters more than most people realize. When it comes to choosing where to open your brokerage account, you have several reputable options. Number 1, Fidelity. My personal choice. No account minimums, 0 commission trades, excellent customer support, and you can manage all of your investment accounts in one spot. That quality of life alone is the main reason why I go with Fidelity. Number 2, Vanguard. Best known for their low-cost index funds, and it is the personal favorite of the author of the book I'm currently reading, called The Simple Path to Wealth, which I highly recommend for new investors. J.L. Collins explains everything about investing in super easy to follow short chapters. I can't recommend this book enough. It has taught me so much about investing, and I'll leave a link in the description so you can go grab a copy. Number 3, Charles Schwab. Another industry leader with great research tools and no minimums. Number 4, Robinhood. This is the brokerage I started with. It's simple, easy to use, but the gamified interface can encourage short-term thinking, which, as we discussed, is not the move. And there's plenty of other brokerages that you can choose between, but my recommendation is Fidelity or Vanguard for most people. Here's what I want you to take away from this video. A brokerage account is one of the most powerful wealth building tools available. Unlimited contributions, full flexibility, no withdrawal restrictions. However, there can be a blurred line between investing and gambling. And it's a line a lot of people cross without even realizing it. When I sold my Dogecoin after one day, I thought I was being smart. Turns out, I ended up leaving $10,000 on the table. The market doesn't reward people who are the cleverest at picking stocks. It rewards people who show up consistently, invest patiently, and think in decades, not days. Decades of compound growth will beat stock picking and chasing short-term gains almost every single time. So open the account, pick your funds, set up your contributions, and then get out of your own way and let time do the work for you. Well, that's it. Those are the 5 accounts you need to start building real wealth. It really is that simple. I'm going to make one more video highlighting all of these accounts in a concise and easy to consume way, so be on the lookout for that. I've laid out the roadmap. Now it's your turn. Go open the accounts if you haven't already, and get to investing. Future you will be grateful you started when you did. Make sure you check out the other videos in this series, the checking account, the HYSA, the Roth IRA, and the 401k. They're all going to be linked in the description. All right, that's all for now. Peace.